Happy Sunday, everybody. Let me turn on the right camera. Yes, we are here. We are live. It's Sunday, and I hope everybody's doing well. Markets are still a bit flat, despite some of the bad news coming out of the East, but we'll hold on tight and keep on going. So today we have a loaded session. As I say, every week the questions get harder and harder. We're going to talk about the top 25 cryptos, where they were exactly a year ago versus today. We're going to look at some stocks, my top stocks, do a bit of tap dancing, talk about long-term capital gains versus short-term capital gains and how that constrains my trades. We're going to talk about money and inflation, interest rates, institutions and Bitcoin, and a whole lot more. So a lot to get through. Let's go fast. Math, money, and freedom. This is not investment advice. And the first question is from Ripple A. How important is retail participation versus institutions versus in driving Bitcoin price up? Great question. There's a lot of confusion out there. A lot of people think Bitcoin is still a retail game. It is not. Oh, we got people from Spain in here. That's awesome. I love the international audience. So thank you all for being here. Thank you for taking the time on this day of rest. So let's talk about where we are now. We look at this in great detail. We believe the tipping point was in Q1 2021. If you look at this chart here, you see the blue versus yellow. Blue is institutions, yellow is retail. In Q1 2021, that was the time when basically Bitcoin and institutions were almost the same. And since then, it's tipped over. And now we believe institutions make up at least 70 to 80% of all the transactions on Bitcoin right now. The big transactions. And let me prove that to you on how we look at it. First of all, let's look at the history of Bitcoin transactions. The X is for transaction size history. You will see the Bitcoin average transaction size from the very beginning, in the years that really matter, was about $3,000 up until the tail end of 2017. Then the bull market hit, and there was a couple of days when the average transaction size was 150,000. You can see some high net worth people jumped in. Hello, Greece. And Daxi. Then there was a splurge, and let's zoom in to the last 3 years. Let's look at exactly what happened over the last 3 years. Here you can see the absolute explosion in Bitcoin transaction sizes. And if you believe there are retail investors out there dropping $800,000 a transaction, well, there are a lot of rich retail investors. But basically, we went up from the average size in 2017, $3,000 up to 150K, and then back down to about 10,000. Even during the March 2020 crash, that was 10,000 was the average transaction size. So people buying basically 1 or 2 Bitcoin at a time on average. But then August, September 2020 hit. Now, I believe this is when Michael Saylor and others started jumping in, and the average transaction size went from 10 years of $3,000 to $10,000 to $150,000 in August, September 2020. Then, if we look at the last 3 months, the average transaction size based on the simple moving average I calculated is $800,000. So to put things in perspective, ladies and gentlemen, that is 133 times larger than the historical average transaction size. That is not retail. And remember, if you have somebody jumping in and spending 133 times what a retail investor, that obviously has a huge impact on prices as we go forward. And to put things in perspective as well, just a little bit of food for thought. A lot of people think, oh, institutions are bad or VCs are bad and retail is good. And if a coin is just bought by retail, it's a good sign. But no, think of Tesla. 70% of Tesla is owned by insiders and institutions. Only 30% is retail. Okay, so when you look at the best assets in the world, same thing for Apple, by the way, best assets in the world, you will have institutions. And down the line as well, institutions represent retail investors. So think about that too. Now, a little bit of food for thought too. This comes up. Everybody is still thinking about an 85% retracement along the lines of what happened in 2017. I don't believe that's going to happen. If there was a risk of an 85% retracement, institutional investors wouldn't touch this at all. They're okay buying with a 50% retracement, maybe, which we've had if they bought at the top. But most of the institutions are very clever. They buy where we are now. but they wouldn't do it if they thought it was going to go down 85%. That's why I believe this market is so different. One, the last bull run was 97% retail, 3% institutions. This one is 80% institutions, 20% retail. Very different world, ladies and gentlemen. So next question. This one was brilliant from Ringo. So comparing the top 25 coins in market value now to the same list of 25 from a year ago, how many of the 25 are still in the group today? So I really enjoyed this, but it's a little more work than we imagined putting it together. So we put together a chart to represent exactly what's happened over exactly where we were March 13, 2021 to March 13, 2022. What has changed? Who are in the top 25 now versus then? And it's super interesting. So let's jump in. First of all, but anyone's Fenrix, I was just looking at the comment in real time. Anyway, if you look at Bitcoin and ETH, they are represented by greens. Greens mean they haven't gone down nor left their space, but Bitcoin and Ethereum are exact same space they were before. As you can see, when we go down the line, you'll see the brown of Binance. They've gone to space number 4 from space number 3. Tether has actually gone up, which is kind of ironic. But if you look at the other names, Cardano is brown, Polkadot is brown, which means it's gone down. So Cardano was 5th spot a year ago today, exactly a year ago today. Today it's the 9th spot. If you look at Polkadot, it was number 6. Today it's number 10. Litecoin was number 9. Today it's number 21, etc., etc. Now, you can see the red ones as well. Actually, it's interesting to note XRP is actually up from where it was a year ago. That was in the thick of the SEC investigation, so it probably had a big impact on price. Uniswap, if it's red, it means it's dropped out of the top 25. So not only that, there's NEM, ZEM, Theta Network, Aave, Cosmos, OKB, VeChain, Crypto.com, and Monero. They all fell out of the top 25. And then we have the pink stuff. The pink stuff is new. This did not exist in the top 25 a year ago. So number 1 on the pink is Solana, now in space number 8. Again, they were trading exactly a year ago at $13. So it's gone up 622% in a year. So a lot of people complain, oh, Solana is not doing well. But remember, over the last 12 months, it's still gone up 622%. Terra Luna is very interesting too, because Terra Luna was ranked number 21. Now it's number 7, and it's gone up 719%. So even though, it's kind of interesting, even though Solana wasn't in the top 25, Luna was, but Luna has outperformed Solana over the last 365 days. Interesting. Then you have other names. Shiba Inu, not going to give that any thought or time, but that's number 15 now. Crazy world. Kronos is number 17. Matic, again, didn't exist in the top 25. Jumped in there, and the Matic returns have also been splendid. It's up about 300%. And then we have DAI, stablecoin. That's up there in the top 25%. Cosmos Hub Atom, Near, Tron, and Staked Ether. So that's what happened. You can see the big losers. Chainlink falling from the 10th spot all the way down to the 23rd spot. Litecoin, Bitcoin Cash, all that type of stuff. You know, it's to be expected. But that's where we are. Now, the really interesting thing, if you pull out, this is a piece that I liked. If you held the top 25 that are the top 25 today over the last year, you would have made 130% on average on your bag, which is extremely good. But if you didn't hold Luna or Solana, you would have made 10%. So those two make up the lion's share of the returns. Ethereum is up 44%, Bitcoin down over the last 365 days. So that is the kind of summary right there. One last time, I'll let you glimpse at it. And Ringo, thank you for the question. It really made us think. Next question is, if you're going to be more aggressive with profits this year and not care about short-term capital gains, why are you worried about long-term capital gains on ETH or Sol trade? Well, there's a couple of things here in this question we need to look at. First of all, when we look at an example long-term capital gain calculation on a 5x. So let's run through some numbers here. Imagine some hypothetical numbers. You have an investment, it costs you $10,000. it goes to 50,000. That's a 5x. You hold it more than a year, so you got long-term capital gains. If you live in San Francisco, you'll be paying capital gains of about $14,000. Now, if you flip and go to short-term capital gains of the 5x, this is interesting. Here you can see that same investment, you'll now have to pay $22,000 in short-term capital gains. Now, I know your question is regarding short and long, but I want to dig into this. I've wanted to do this for a while to explain why sometimes I'm boxed in. So, for example, if you have a 5x long-term capital gain versus short-term capital gain, this is the scenario here. You buy your asset for 20 bucks, it goes to $100. It's happened many, many times to many, many cryptos over the last year or so. Case in point, as I just covered in the previous slide, Solana going from $13 to $82 in 365 days, which is nearly 700% return. So it's a 7x, not a 5x. But your short-term capital gain would be 22,000. That's what I would be hit with if I sold. Long-term 14,000. Now, if you do sell at that level, this is the most important piece, ladies and gentlemen. Make sure you get this. If I sell and I profit 40,000, I have to pay those taxes, the red numbers. Short term is 22K, long term 14K. But if I want to get back into that, if I want to explain this, say for it just happened to Luna and I was boxed in. I was looking at Luna 104. I told myself I'd sell half at 100. I didn't. 104 because I was looking at my tax debt to pay, and then I was looking at trying to calculate the retracement. Would I be able to get back in after taking that tax hit? And that is where we are right now. So if you look here, the short-term capital gain after the break-even point after gains would mean the stock needs to go, or the crypto needs to go from $100 down to 56 bucks. So I need basically the asset to nearly half. I need a 44% dip for me to get back in. If it's a long-term capital gain, I need a 28% dip. So when I look at assets like Ethereum or Solana or whatever else, I am boxed in, especially on the short-term capital gain side, because I need it to half, basically, before I can get back again, or else find another asset that will do better than the one I'm in. And that's why I am hesitant to sell. So I hope that explains things. Now, there is a difference, and this answers your question. If you get a 1x, not a 5x. So if you get a 1x, this is where I'll take profits much more aggressively because less dip is required. So we have a $20 asset, goes to 40 bucks, we make $10,000. I pay short-term capital gains would be $5,500. Long-term capital gains, $3,800. I need, for the short term, I need a dip 27% to happen to get my money back, and long term, 19%. And that 27% is a lot more palatable than a near 50% dip. This is why I get boxed in, and this is why I do what I do. If you live in a tax-free environment, you don't have to worry about any of this headache. So thank you for the question. I think that was, I forget who asked that question. Whoops. Dan the Soul Man. Thank you. So next question is from Benyo. Do you think that crypto will be badly affected by higher interest rates, or will they actually help it finally decouple from the stock markets? This is super interesting. So let's jump in and talk about a couple of things. One, let's look at historical Bitcoin correlation with the S&P 500. I think I've showed this before, but this is an updated chart. And here you can see that Bitcoin has been positively correlated with the S&P 500 since early 2020. Notice a lot of things are happening in early 2020, like institutions coming in, etc. That could be part of it too. And it means they broadly move up and down together when they're correlated. The correlation coefficient has risen from 0.41 now from about 0.1 in September. So it's become more correlated, more risk on. And when there is 0, it means there's 0 correlation. And 1 implies perfect synchronized movement. And by contrast, if you look at the coefficient in 2017, 2018, 2019, it was 0.01. So basically, Bitcoin did its own thing. It wasn't a risk-on asset. And this ties back exactly to what I said before. This is an 80% institutional game now. It's not retail. Retail that invested in crypto back in 2017 weren't people that looked at the stock market as a completely separate league of people. So if we look at this, now that Bitcoin is not entirely held by early adopters, and it's sitting in that 60-40 type portfolio. Yeah, I know, not 60-40 still there. This means that it is considered a risk asset. And the people that do invest in it, treat it as such. And that's why we get that correlation. Now, back to your question. Let's look at the weird bit of irony regarding inflation hedges, risk on assets, interest rates, interest rate hedges, inflation hedges, etc. So I put in a couple here to compare for you all so you could see their performance since spring 2020, January 2020. The expectation was for higher inflation. All my early videos in when I first started YouTube was all about inflation as well, and Bitcoin being a hedge. But the irony is, this is so funny, it is still holding, Bitcoin is still holding up against traditional inflation hedges since January 2020. Bitcoin is up 40%, tips are up 12%, gold is up 5%, and silver is down 3.3%. But it is ironic because the bull case that many had for Bitcoin and digital assets in 2020 was as a hedge for inflation. And now inflation is absolutely vicious, but it's more tied to risk on assets. So that's a weird thing. Now back to another, and sorry to cover all this, but it's very, very important you can all understand. If we look at the S&P 500 as a risk on asset, as a proxy for Bitcoin today, because of the correlation, and we look over the last 10 years, you will see the interest rates during between 2017 and 2020 went up. And then ever since C19 hit, we went to basically a zero interest rate environment. But even with the interest rates going up, you can see that the stock market still went up. So as far as I'm concerned, the amount that they can raise interest rates is very minute. We'll never go back to the old interest rates we used to have back in the day. Like I remember, I was looking at old mortgage statements from, what was it? 1999, 2000, and the interest rates I was paying on 30-year fixed mortgages was ginormous compared to today. So we're never going back to that environment. They can't. The country has too much debt. The world has printed too much money. You can't go back. And therefore, the only incremental increases they can add are very minute. Therefore, it'll not have a big impact on risk on assets. Sorry for that long-winded answer. But remember as well, this is probably the most important thing. We are on the cusp of an inverted yield curve. There's a gap between short-term and long-term yields. And we are now getting back to near recession level. I think there will be stagflation, short recession, negative GDP growth, but it'll bounce back fast because of money printing. The government doesn't want to have a recession. That's not good for politicians to get reelected. It's that simple. Anyway, next question. Keeping BTC. If BTC wallet transactions are trackable and one uses a CEX, which is a centralized exchange, as a fiat onramp, is the only way to get truly sovereign Bitcoin peer-to-peer? Interesting question. So first of all, how to get truly sovereign Bitcoin. In order to get this, step one, make sure you are using an exchange that allows you to withdraw your Bitcoin, like not a PayPal or Robinhood, even though Robinhood have said they have a wallet. I haven't heard of anybody who had got theirs yet. Let me know in the comment below if you did get a Robinhood wallet, and let me know how easy it is to use. Now, so first of all, if you have that exchange, withdraw your Bitcoin into your self-custody wallet like Trust Wallet, Trezor, Exodus, whatever you want. Step two, by the way, check out our videos on custody and wallets. Step two, withdraw the Bitcoin into your self-custody wallet. Now you have what is considered truly sovereign Bitcoin. Once you withdraw it into that wallet, nobody can take it away from you. No one can censor or block you from transacting it. And however, while Bitcoin is sovereign, it is not anonymous. Remember that. There might be a track record of somebody saying, oh, Jane Smith downloaded 10 Bitcoin from Coinbase, stuck it on her wallet. Coinbase will have that record and may share it with somebody. And also, since Bitcoin is on an open ledger, it's fully trackable and traceable. That's why the whole FUD against, money laundering and everything is complete crap. Anyway, there are also better ways to protect your anonymity while using Bitcoin. Now, the second part is a little bit more interesting. This involves acquiring your Bitcoin without any identity, without any KYC. I don't know if I should be talking about this, but it was a question. Of course, we don't recommend you to ever do this, but there are many ways to get Bitcoin anonymously, including non-KYC exchanges, peer-to-peer exchanges, decentralized exchanges, crypto ATMs, etc. It won't name specific we won't name specific platforms or make specific recommendations on YouTube, but you can easily find them with a Google search. Also be sure that these platforms are legal for you to use in your jurisdiction. And you can also obfuscate, this is part two, your transactions. The easiest thing to do is use an address once Okay, this immediately obfuscates how much crypto you truly have. And while the blockchain is public, you cannot tell if addresses are linked together and figure out if multiple addresses belong to the same person. In most wallets today, this is a setting by default where it will create a new address for you every time you receive Bitcoin. Further, there are tons of other strategies as well, but Google it, check it out. Now, the third part as well, break the connection to your identity. There are ways to break transaction history connection when you acquired Bitcoin, and these methods include using specific software to perform this. Again, we won't mention what they are, but make sure it's legal in your jurisdiction as well. Okay, so there's lots of ways to cover your tracks, as they say. Next question is from FX19. I know you're focused on Tesla, Google, MicroStrategy, NVDA, Square, but are there any good stocks to pick up in your opinion? Great question. And we always look for these. So first of all, we have kind of our tier one. These are hyper growth stocks with intense moats and extremely explosive earnings. They are Tesla, Google, Amazon, and MicroStrategy is a Bitcoin proxy. So that's in there in kind of the tier one. That's because we're bullish on Bitcoin. And that is the best Bitcoin proxy we can find. Second thing, tier two, much smaller part of the portfolio, but still there. NVIDIA, Trade Desk, Shopify. These names have been beaten down, especially Trade Desk and Shopify. I had Trade Desk, I sold it about $96, $97 right before the end of the year. And I've been real tempted to get back in, but I will get back into that position in any market weakness if I had a little bit of cash. Shopify, I also hold a little bit of Shopify too, and I've had it long term, so I'm still way in the money because I got in a long time ago. So that's kind of my other positions. Now, the other area that I like too is some of these select mining companies, and we are into CleanSpark, Hut 8, and looking at Core Scientific as well. So that is kind of the most important stocks. And trust me, every day we look, we hear things like, oh, what about Microsoft? And what about this? Nothing beats the earnings growth that we see of things like Google and Tesla out there, and the PEG ratio, PE ratio, all the stuff that we look at, that we like, that are disruptive, and that have that moat. Okay? So hope that helps. Next question from D. I know myself and self-custody is not for me. Is there any other safe options right now? So bravo to you. It's very brave for people to know their limitations. So extremely commendable to be honest with yourself. And that was my big concern a year and a half ago, is I saw so many people losing their keys, smashing their hardware, throwing away their hard drives. I was really concerned. Do people have the OPSEC to be able to self-custody? So that is, you're saying a very brave thing, but there are options for you. So here are two. The biggest risk, as we covered, to your crypto is yourself. It's not hackers. It's not anything else. It's yourself. And we are on the receiving end of stories every single day of people sending stuff to the wrong address, losing their keys, hardware breaking, etc. Even tech-savvy people like software engineers, everybody can screw up. So the first way we'd like to talk about is nunchuck.io, for example. This is a easy way to self-custody. It's an imperfect option, but you can do it through a shared manner. And that means if you have someone who is tech-savvy that you can trust, it could be your son or your wife or your daughter or your husband or whatever else, this option can work for you. And with a multi-signature wallet, you can create a wallet that 2 out of the 3 keys unlocks your Bitcoin. So if there's 3 parties to the transaction, you just need 2 of them. And you and your trusted tech-savvy partner, underline that a little bit, will each get a key, and you store the third in a vault or in a secure location. And this way, your tech-savvy partner doesn't have access to your crypto, but should you lose your keys, you and your partner can retrieve the backup key and still unlock your crypto. So check out nunchuck.io. Again, we are sponsored by white tea this morning, so nobody kidding. We're not sponsored by anybody. Alternative number 2. This is regarding Unchained Capital. This is using a multi-sig custody, where the custody provider has one of your keys. Same situation as before, but with a third party. And the third party doesn't have access to your crypto because it requires 2 out of the 3 keys. Again, you and your partner each keep a key, and if you ever lose your key, you can go to the custody provider to retrieve the backup. Unchained Capital is a company that specializes in this, and they do a great job. Again, not promoting anything. Please do your own research. And the other one, these options are imperfect as they do require you to have a trusted tech-savvy partner or a third-party partner. If you don't have one, your best bet might still be to use a custody solution like Coinbase or FTX. They are still safe exchanges, especially now with regulatory compliance breathing down their necks. And if you can still try and diversify at least a little bit of your holdings to the self or shared custody model, it's a good idea. So hope that helps with your question. And again, congratulations for knowing your own limitations. Very, very important in investing and self-custody of crypto. So next question from, let me try to read this. Voltron, is Bitgert a competitor of Solana? I read it's faster and lower gas fees. A Solana killer. Who wants to hear about it? This is so funny. So we dug into this, and all Google results point to the same quasi-article on different websites. We did a detailed search for Bitgert, and Dr. Watson helped me with this. And all of the search results on the first page of Google link to different articles talking about how Bitgert is a better than Solana, better than Matic, etc. The only problem is they were all the same article and looks like written by the same author called Analytics Insight, just copied and pasted, changed the title, and published in different websites. So that's a positive. Okay, let's go a little bit deeper. This one, if you look at the excerpt from the article, their white paper, etc., it's filled with grammatical errors and has zero mentions about the technology. Always a good sign. All it does is make general claims about what a great community it is. Sound familiar? And it's going to be better than all these other well-known blockchains. And we couldn't find any other, valid articles on the project, etc., or who is behind it, any credibility, any good leadership. Nothing. And let's check this out. Lastly, we checked out the website. It looks absolutely terrible. It looks like one of those scam sites I posted yesterday about, when they write the word, they clone stuff and it said excellent without the N. So anyway, back to this. You can see here a whole bunch of weird stuff. Their so-called white paper is so poorly written. It's basically a 9-slide PowerPoint. They aren't even trying. So we could go on and on, but let's not waste anybody's time here. Again, I used to say 95% of crypto is a scam. I'm about to jack it up to 98, 99%. Be careful out there. Remember this. Have zero trust going into any investment. Never trust anything. Never trust anybody. Always do your homework. Always verify. Everybody's looking to rip you off. Go in with that mindset. Okay, if I'm looking at this asset, number one, you think, how are they going to screw me? Okay, just go in with that mindset and you'll be fine. I remember somebody told me regarding the trust of others, some people start people with 100% trust and go to 0. Some people start with 0% trust and go to 100. Those that go from 0 to 100 end up having true relationships, true friendships, because they weed out all the crap in the middle. So anyway, sorry to go off on a ramble. Next one from Anonymous. NVTA with a 1 to 2 year time frame. Do you feel eventually come back? And if you have time to wait 1 to 2 years? This one has been one of the worst disappointments of 2021. Sometimes I wish I never came across a Cathy Wood video that sold me on NVTA, but they had a lot of other problems since then. So first of all, they made some acquisitions. They haven't been able to control their burn. They are spending stupid money, and there's no line of sight to profitability until 2024. So they are growing fast, but they're burning too much cash in the process. The other thing they're doing, they missed Q3 earnings, and they had very poor guidance, which sends a shiver down the investor spines. They all run for the exits. As I mentioned, bad acquisitions, bad expense control. And everybody now, because of the war and the risk-off environment, people want names that generate profit. Things that don't have line of sight to profit for the next 2 or 3 years are getting absolutely taken to the woodshed. Really, really bad. Also, what they also announced, which scares people too, is dilution. They are issuing more shares, which are diluting the existing shareholders, to raise money to cover their cash burn, which will be at least 600 million in 2022 by our numbers. And the outstanding number of shares could rise. Now, I think it's very interesting as well we talk about this. I hate inflation. I hate any token that has high inflation unless it has really hyper growth, and I hate share dilution. That's where this DNA comes from. So you can talk about NVTA dilution being akin to token inflation. It's the exact same thing. Okay, so when you want a hard asset, it's the beauty of Bitcoin. It's hard. There'll never be any inflation or dilution. So anyway, sorry, Trump. Now, a slight bit of good news. It's currently trading at $7 or $8, I think. Analysts now see at 21 as the price target this year. And next year, 2023, it will be closer to their profitability in 2024. So I don't know. It could be a 2-year wait before we get back to $30 or so. But being me, I don't have time to wait. So there's better things to invest in. You know, and investing is a risky game, everybody. Next question from Anonymous. Can you explain why some would get involved in DeFi protocols instead of simply using something like Celsius to earn yield? Good question. I like Celsius for security reasons. But the big question is DeFi versus CeFi. DeFi, decentralized finance, CeFi, centralized finance. The key advantages of using DeFi versus CeFi is there's reduced counterparty risk, and centralized platforms like Celsius, you have to hand over your keys. And with DeFi, you don't hand your keys to anybody. And you can engage directly with the protocols. You also don't need to trust a centralized platform when they are properly securing or insuring your crypto. Now, transparency is also very important. DeFi protocols are open source. Anybody can validate the code and see what the protocol is doing. That's the beauty of this whole new world. It's not a whole bunch of folks in a big room smoking cigars controlling everything. Third part is it cuts out the middleman. With DeFi, you deal directly with other participants. It's peer-to-peer, like swapping between cryptos. You are engaging with people providing liquidity, like liquidity pools. And this, in contrast to CeFi, where there needs to be an exchange managing order books, etc., lending and borrowing, there's a lot more complexity behind the scenes. And fourth advantage is zero paperwork. Imagine taking a loan without providing any documentation, no ID, no credit, no history, not even a name or anything else. This is the power of where the world is going. And finally, fifth point, I think it is at this stage, permissionless. DeFi is open to everybody. You cannot be locked out. You can be blocked based on your age, race, national, political ideology, whatever you've said or done in the past, your whatever, credit score, it doesn't matter. And that's the other thing that is really scaring traditional banks. And I actually personally like it because it doesn't discriminate. So here's to DeFi in the future. Again, as you guys know, I'm very bullish on that. And finally, this is a big one. And my throat held together, talking for 37 minutes straight. This one, very proud. IA just adopted America. America was shot in the wing and is a bald eagle, but could not fly well enough to catch prey in the wild. And now he is in a permanent care facility. And we love America. So we want to put together a big collage of all the animals you guys have helped to sponsor. So big thanks. Switch camera and get some questions. Bitcoin price is above 39,000. That's good news. We're in that really tight range where I think it's now 3 days. It's been around 39K. Exactly 4 days. 4 days at 39K, which means something has to give. Will it be to the upside or the downside? And I think if there's no bad news out of Ukraine, I think we're going to be in good shape. So we're waiting for that bounce. And Sunday night can be very active. So watch that carefully. Again, thank you to the mods and everybody in the chat. I'm going to do some open questions now because I love this. And hopefully we'll still go. Okay, opinions please on the use of Solana leverage and staking platforms, Francium and Orca. I don't use either platform. I've heard Orca is better. It's been around a little bit longer than Francium. But be careful when you stake. I personally stake on, right now, I stake in 2 or 3 different places. I can't remember. I have Solana on Celsius, staking there. I have Solana on my Phantom wallet, and I have a little bit dangling around on an Exodus wallet somewhere. And the Phantom wallet stuff, I moved from Everstake, which is based in Kiev in Ukraine, and I moved it to Bison Trails, which has a tight relationship and very good funding from Coinbase. So that's all I can say. In terms of Sol leverage, I don't do leverage on crypto. It's way too volatile. I'm doing a couple of little tests to test out. We're testing out some new models and methodologies here around swap trading and leverage. So stay tuned for that, but it's far from perfect. But that's where we are. Cryptolicious, thank you for being here. If there are only 21 million Bitcoin and 19 million have been mined, what's the long-term business plan of mining companies? So the beauty, if you can imagine, you're in the year 2007, 2008. Now you're in the year 2008, 2009, and you're looking at the financial crisis, and you're trying to build a solution to deal with it, a new money that can rule the world. And you plan out exactly how this thing will be adopted over time on an accelerated parabolic curve. And you know that the price is going to go up. It's called number go up technology. It will, especially when you look at the denominator, which is fiat currency, which is going down. So there, even you could even argue, even if Bitcoin stays flat, you're still making money because the denominator is going down. Anyway, separate story. But the point is, the price of Bitcoin will go up. Miners make money from not only Bitcoin, minting new Bitcoin coins, but also transaction fees. And as it keeps on going up in value, they make more and more transaction fees. And you can see now some of the break-even points for miners are as low as $20,000 a Bitcoin. So they're minting. For every Bitcoin they mine, they're making nearly 50% profit on it. And they're making transaction revenue as gravy on the side. And some of them are even lending it out and earning yield on it too. So it is still a crazy profitable business. If the hash rate stays where it is and Bitcoin price falls, it's a whole self-regulating mechanism. So the more higher the price, the more miners are attracted. Lower the price, the more miners turn off their machines and go elsewhere. Or it's not profitable to mine, they turn off their machines. Or if the electricity goes up in price, turn off their machines. So that's how it works. And a lot of people say, what'll happen after the year 2140? The protocol will be tweaked to make sure the miners are supported. I'd love to be here with you all 120 years from now, but that's not going to happen. Anyway, Monkybonobogorilla, how are you? I just did that one. Trust no one. Next question. What comes first, ETH BTC, and when 0.05 or 0.08? At this stage, it all depends on what happens. I think the layer ones and Ethereum, etc., have just been beaten down for a whole host of reasons. We are actually in that Bitcoin season. We haven't hit alt season. Bitcoin dominance is where it is right now. I think 0.08 is more likely. Let's have a quick look at the actual chart so people know exactly what we're looking at. Crypto, watch this. And hold on a second. Yeah, this is so funny. So let me try share this if I can. You never know what's going to pop up on my screen. This is the chart our friend was talking about, ETH to BTC. You can see the current price is 0.066. I think we're far more likely to hit 0.068 than 0.05, unless something really bad happens to the protocol. So great question. Thank you for that. That's nice the way the screen showed up well. Thank you, Trust No One. Robin Kleine, your thoughts on Rune? I was wondering what the position of Rune is on your compendium. It seems hot right now. Yeah, it's hot. Let's check in on the compendium. Rune was one of those ones that I had a limit order to buy at like $3.01 after it was hacked. I saw it going from 10 down to 3. And let me see. Rune, there we are. Hold on a second. I remember looking at it. It was only investable because it was at $3. Otherwise, the compendium rating is 5.4 out of 10. So it is low. The problems with it, inflation's 35%, heavy insider distribution, not a lot circulating, but 46% circulating, heavily centralized. That's why it just doesn't score well. And that's where, let's check out the price. I haven't looked at that in a long time. Pull up the Rune chart. 6.5, so it's doubled from the 3 after the hack. Let's show you guys the hack I was talking about. It was about 6 months ago, I think. Maybe even longer. Anyway, let's pop this up so you guys can see the rune chart. And here you can see what's been floating around. It did hit, I think it was, that was the hack, must have been in July. Because I remember I had a limit order, I missed it by 1 penny. It was one of the closest limit order shares I've ever had. And it's been bouncing around there, but it is a bit of strength. But don't, everybody, please don't get sucked into strength. You have like scam coins, they wait for the whole market to go red and then they pump them hard. And that attracts retail investors like, ooh, this is going up. Hex is going up. So if it's just, be careful out there. Don't necessarily take a pump as a signal to buy. Yes, it's gone from, let's go from $4 to $6.50. That's a big move when you go from a low number to a big number. But it might go to 12, but we'll see. But it is not a name that we would like to buy into right now. Next question. JKS. I have about 4% of my crypto in DOT, Link, ADA, and Algo, all down about 36% of my cost basis. Would you dump these and put the money to Bitcoin, ETH, or Sol? These three make up about 92% of my bag. Ooh, sorry about that. Yeah, Polkadot has been a mystery. Chainlink has too high inflation. I won't mention Cardano, and Algorand I never liked. So from those, yeah, just right now, what I do is I'd probably think about taking a risky part. Take one of those like Algo, swap it to Phantom. Even though Phantom lost Andre, I still believe the protocol is worth it. It's a top 5 layer 1. Our top 5 layer 1s as well, everybody. It's Ethereum, Solana, let me get this right, Luna, Phantom, Avalanche. They're our top 5 in order. So think about, biting the bullet, taking the loss. It's very hard. We have a piece coming up next week. It kind of talks more about the psychology of investing. And humans are very, 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 very bad at selling, especially at a loss, because selling at a loss means you're admitting a loss, which means you're making a mistake. And humans don't like to admit mistakes, so they're not going to do that. So from that perspective, think about those. I think Chainlink has a lot of value, but the inflation is too high. Polkadot, it's all a function of interchain bridges. They were unique at one stage in time, but now there's competitors like Wormhole, Cosmos, etc. Algorand, they're going after the enterprise side of the house with stablecoins and central bank digital currencies, so I don't like them. So that's what I would do. And maybe keep a couple and layer out as they bounce. They should bounce. They're all beaten down now. Bombiggy, thank you so much for your intelligence. Because of you, my life changed last year so much. It's so happy. So because of that, I'm so busy and I love it. So with all the beautiful animals you save me. Much love. Bombiggy, that is so nice of you. And we'll try create an animal for you as well called Bombiggy next week if we can find one to adopt. Appreciate that. And thank you for donations as well. Cropcraft, Taz Teets, Mike S, Beta McGee, Kryptonite in my pants. And I know people are looking for us to find the next Solana. We haven't. A lot of people are saying this is the next Sol killer in Solana. We haven't found it. If we do, you guys will be the first to know. So thank you all. Hit the like so we can get the word out and help people avoid painful mistakes. And a big thank you as well to Diadon ACS. And time for Self-Care Sunday. Goodbye. I haven't told I need to take care of myself. Thanks all. Happy Sunday. Bye.